People ask me all the time, what income do you actually need to buy a home in Seattle right now? So let me give you the real numbers, not a range, not just it depends, the actual math for 2026 at 3 different price points so you can see where you realistically land. The baseline, median home math. The median sale price for a single-family home in Seattle right now is right around $825,000. Let's build from there. So if you put 20% down, that's a $165,000 down payment. Your loan is $660,000. At current rates, let's call it 6.75% on a 30-year fixed, your principal and interest payment is approximately $4,280 per month. Add property taxes for King County, roughly $700 to $800 per month. Add homeowners insurance, about $150 to $200 per month. You're looking at a total housing payment of approximately $5,200 to $5,300 per month. Using the standard 28% housing to income guideline, you'd need a gross monthly income of about $18,900, which means an annual household income of roughly $227,000. That's a lot, and that's the median. What income that actually requires. Let me add a little context to that number though, because $227,000 sounds like a lot, and it is a lot, but it's worth understanding what that looks like in Seattle's employment market today. Seattle has a higher than average concentration of households in that income range because of tech, aerospace, healthcare, and professional service industries that are here. The median household income in Seattle is around $115,000 to $120,000, which is well above the national median, but still well below what you need to comfortably afford the median home here. That gap is real, and it's part of why the affordability conversation in Seattle is genuinely very complicated. The 28% rule is a guideline, not a hard cap. So plenty of buyers carry a housing cost that's 32% or even 35% of their gross income if other expenses are low, so they don't have car payments, minimal debt payments, no dependents. But I want to give you the conservative number so you're not surprised when a lender runs the math. If this number surprised you, either higher or lower than you expected, drop it in the comments. I'm genuinely curious what people are coming in expecting. I've had buyers who thought Seattle was out of reach discover that they were actually closer than they realized. And I've also had buyers who assumed they could afford anything and got recalibrated by a lender. The lower down payment scenario. Here's what I actually see with buyers. Most are not putting 20% down. They're using 5% down or 10% down programs, first-time buyer options, or even down payment assistance. At 5% down on the same $825,000 home, your down payment drops to $41,250, significantly more accessible than that $165,000 we talked about. But your loan goes up to $783,750, and you add private mortgage insurance, which runs roughly $150 to $250 per month. So the total payment in this scenario is closer to $5,800 to $6,000 per month. For that to fit at 28%, you need around $250,000 of household income per year. The monthly cost goes up, but the barrier to entry drops dramatically. Look at what $600,000 gets you in Seattle, because this is a more realistic entry point for a significant portion of the buyer pool. At $600,000, 10% down is $60,000. So your loan is $540,000. Now at a 6.75% interest rate, your principal and interest is approximately $3,500 per month. Add taxes and insurance, and you're looking at a total payment of around $4,300 to $4,400 per month. For that to fit at 28%, you need a household income of about $165,000 to $170,000 per year. At $600,000 in Seattle, you're looking at condos, townhomes, and some single-family homes in neighborhoods further from the downtown core. It's not unlimited inventory, but there's a real market in that price range, and buyers who are willing to expand their search geographically can find it. Down payment assistance. What's actually available? The down payment is usually the bigger barrier than the income. Here's something most out-of-state buyers don't know. Washington State has several down payment assistance programs that can actually meaningfully change the calculation. The Washington State Housing Finance Commission offers programs that provide between 3 to 5% of the purchase price as down payment assistance, in some cases as a forgivable loan even, and in some cases as a deferred payment loan. There are income limits and purchase price limits, but for buyers in the right range, these programs can actually cover the entire down payment on a $400,000 to a $600,000 home. There are also programs specifically for public employees, veterans, and first-generation buyers. If you're a first-time buyer in Washington and you haven't looked into this, you may be sitting on an option that changes what's possible for you completely. It's worth a 15-minute conversation with a lender who knows these programs before you conclude that you can't get to a down payment savings. What's the price range you're looking at? And does that math here match what you've been told by a lender? I'm curious whether the numbers people are getting pre-approved for actually line up with what they can realistically afford long-term. So drop it in the comments below. The honest summary: Seattle is expensive to buy in. I'm not going to lie about that, but the people who've bought here consistently say the financial commitment was worth it because the equity has held, the quality of life is high, and they're not paying rent that covers someone else's mortgage. The question isn't whether you can afford Seattle in the abstract, it's whether you can afford a specific home at a specific price with a specific monthly payment given your income and your expenses. It's all unique to you. That's a 20-minute conversation with the right people, not a conclusion that you want to draw from a YouTube video or a cost of living calculator, to be honest. So whether you're 90 days out just running numbers, 30 days out and about to talk to a lender, or you're already in contract and maybe you're second guessing the math, I do this with buyers every single week. It's not as complicated as it might feel from the outside once you're working with the actual numbers for your life. If you're thinking about buying in Seattle and you want to run your actual numbers, not the general market numbers, yours, my contact info is below. That conversation is free and it won't take more than 20 minutes tops. One more I'd watch: the rent versus buy video on this channel does the same math, but compares it against what you'd pay renting a comparable property. That's the question a lot of buyers are actually trying to answer right now. So that movie's in the playlist as well.